Our next guest lays out the 6 different ways that prove that wealthy people pay a lot more than their fair share. And it's all through taxes, federal taxes, state taxes, property, sales, capital gains, estate taxes. Ted Jenkins wrote that list, and he joins me now. All right, Ted, good list. Look, what the left really wants, okay, they want more taxation. I got that. But what they really want is to confiscate wealth, to seize wealth. That's what they're really aiming at, right?
Well, 100%, Stuart, and good to see you. I mean, just look at what's happening in the ballot in California right now, that if this billionaire's tax passes, if you have $1 billion, you're going to pay $50 million of taxes for every billion that you have. Just look at what's happening in the city of Los Angeles, where if you own what they call to be a mansion, a property worth $5 million or more, when you sell that property, you have to pay a transfer tax to the city of Los Angeles. So these are all forms of the redistribution of wealth. You're absolutely right. They want to confiscate it.
It's gaining ground, though, isn't it? I mean, the left has long wanted higher federal income taxes, state tax. It got that. But this is new. Confiscating wealth, I think it's new, and I think it's gaining ground within the Democrats. Am I right?
Yeah, 100%. Look, this overall message that rich people have to pay their fair share of taxes has definitely become a political slogan for the left. And it's not a measurable standard. If you look at federal income taxes, Stuart, the top 10% of taxpayers in America make 50% of the money. The top 10% of the taxpayers in America pay 72% of all of the federal taxes, while the bottom 50% only pay 3% of the federal income taxes. And that's just federal income tax. So tell me what doesn't sound fair about that equation.
But they never define what is a fair share. If you live in New York City and you make good money, I'm talking real good money, you'll pay about 60% of your income in federal and state and local income taxes. And I think that's just plain wrong. That is not a fair share. What say you?
Well, look, the Dems have changed this word fair from being an objective word to becoming a subjective word. And when you have a state that you can't control your spending, your only answer is let's figure out how to create more revenue because we don't want to control spending. So you do this by death by 1,000 taxes, which is exactly what states like New York and California and others are doing right now. And it's why a lot of people are going to Texas and Tennessee and Florida. They're just much more tax favorable states. People are voting with their feet and moving with their wallet.
President Trump's urging New York City's Mayor Mandani to appreciate billionaires. Watch this.
When you lose people like that, it's sort of not recoverable. Then they build something else. They're going to be there for 30 years. They don't come back. And you've got to do the opposite. You've got to cherish them. You have to convince them not to leave. You're going to make their life great. You don't want to lose people like Ken. That would be a big loss for New York.
Okay, Ted, do you think Mandani will cherish billionaires?
No, and I don't think Katie Wilson will either. But the fact is, you don't want to scare entrepreneurs out of your city or your state. Stuart, look, in America right now, when you think about jobs, 70% of them are created on the backs of entrepreneurs and small business owners, the very people that create the economy in your state. Why would you want to chase them out with bad tax policies? That's exactly what's happening in states like New York and California. Entrepreneurs are finally saying, listen, I'm going to migrate to the South. I've had enough of this.
Yep, and it's getting worse. Ted Jenkin, good stuff. Thank you very much for joining us. We like that list and we like those numbers. Thanks very much.